What if I told you that in the near future, your money could be programmed, not just digital, not just traceable, but programmable? Imagine receiving your salary and being told you must spend it within 30 days. Or imagine certain purchases being blocked automatically. No bank employee involved, just code. This isn't science fiction. It's called Central Bank Digital Currency, or CBDC. And today we're going deep into the real question. Are CBDCs a threat to crypto? Or the biggest opportunity Bitcoin has ever had? Let's break it down. A central bank digital currency is digital money issued directly by a country's central bank. It is not Bitcoin. It is not Ethereum. It is not decentralized. It is government-issued digital cash. Instead of printing paper money, the central bank creates digital units that citizens can hold in digital wallets. Some countries are already testing or launching them. China with the digital yuan, the Bahamas with the sand dollar, Sweden exploring the e-krona, the European Central Bank studying the digital euro, and the United States researching a digital dollar. This is not theory. This is happening. But here's where it gets interesting. Not all CBDCs use blockchain. Some use centralized databases, which means just because it's digital doesn't mean it's decentralized. That's a critical difference. Governments don't wake up and build new monetary systems for fun. There are real motivations behind this push. First, cash is disappearing. In some countries, physical cash usage is extremely low. If private companies like Visa, MasterCard, Apple Pay, or even stablecoins dominate digital payments, central banks risk losing direct influence over the money system. Second, monetary policy power. With CBDCs, governments could send stimulus payments instantly. No banks, no delays, direct to your wallet. They could also implement negative interest rates more efficiently. And yes, technically, money could have spending conditions. Now pause here. That doesn't mean they will do extreme things. But programmable money creates possibilities that physical cash never had. And that's where the debate begins. Now, let's compare this with Bitcoin. Bitcoin was created in 2009, after the financial crisis. Its core philosophy was simple: remove trust from centralized authorities. Bitcoin has a fixed supply, minus 21 million coins. No central authority. No one can print more. No one can freeze it globally. CBDCs are the opposite model. They are centralized. Supply is flexible. Transactions can be monitored. Accounts can be frozen instantly. Here's the powerful contrast. Bitcoin was built to remove trust in governments. CBDCs require full trust in governments. This isn't just technological difference, it's ideological. Decentralization versus control. Scarcity versus flexible supply. Censorship resistance versus programmable oversight. And this is where crypto investors start asking, if governments launch CBDCs, do we still need decentralized money, or do we need it even more? Now let's address the elephant in the room. Privacy. It's physical cash. If you hand someone 50 euros, that transaction is private. With a CBDC, Transactions could be recorded in real time. Supporters argue this reduces crime, tax evasion, and corruption. Critics argue it increases financial surveillance. Imagine political donations tracked, spending patterns analyzed, certain transactions flagged automatically. Again, this doesn't mean dystopia is guaranteed, but the technical capacity would exist. And history shows that whenever systems allow control, someone eventually uses it. So, the real question becomes, is efficiency worth sacrificing financial privacy? That's not a conspiracy debate. That's a philosophical one. Now, let's zoom out even further. CBDCs are not just about payments. They're about global power. China's digital yuan is seen by many analysts as an attempt to reduce reliance on the US dollar in international trade. If countries can settle transactions digitally without relying on Western banking systems like SWIFT, global financial power dynamics could shift. Meanwhile, the United States is cautious. The dollar is the world's reserve currency. Launching a CBDC incorrectly could destabilize commercial banks or the current financial system. And then there are emerging economies exploring CBDCs to increase financial inclusion. So this is bigger than crypto. CBDCs may reshape global economic influence. That's massive. Here's something most people don't talk about. If citizens can hold money directly with the central bank, why keep deposits in commercial banks? Banks use your deposits to lend money and create credit. If deposits move to central bank wallets, banks could lose funding power. That's why many CBDC designs include limits on how much individuals can hold. Central banks are trying to innovate without breaking the existing system, but the tension is real. Let's not forget something. Stablecoins already exist. USDT, USDC. They are digital dollars on blockchain networks. So why do we need CBDCs if stablecoins already provide digital fiat? One reason? Control. Governments may not want private companies controlling the digital dollar infrastructure. Stablecoins operate globally across borders, often outside traditional banking rails. CBDCs bring that power back under state authority. So, this is also a competition between public money and private digital money. Now, we reach the core question. Are CBDCs bearish or bullish for crypto? There are three possible futures. Scenario 1. Bearish. Governments push CBDCs heavily. Regulation tightens around decentralized crypto. Stablecoins lose relevance. Scenario 2. Bullish. People experience programmable money and realize they prefer decentralized alternatives. Bitcoin demand increases as a hedge against surveillance and inflation. Scenario 3. Coexistence. CBDCs used for everyday payments. Crypto used for savings, DeFi, cross-border transfers, and censorship resistance. History shows that innovation rarely eliminates alternatives completely. It creates parallel systems. Let's imagine the future. Salaries paid in CBDC. Taxes deducted automatically. Government benefits distributed instantly. Public spending tracked transparently. That sounds efficient. But what if spending categories are restricted? Certain industries are penalized automatically. Financial behavior becomes part of social scoring. Again, not predictions, it's possibilities enabled by programmable systems. Technology itself is neutral. The design choices determine the outcome. CBDCs are not inherently evil. They could increase efficiency, reduce transaction costs, and improve financial inclusion. But they also represent the most powerful expansion of monetary control in modern history. Bitcoin emerged from a crisis of trust. CBDCs emerge from a desire for efficiency and control. So maybe the real question isn't, are CBDCs a threat or opportunity? Maybe the real question is, what kind of money system do we want for the future? One based on trust in institutions, or one based on decentralized code, or a hybrid of both? Now I want your opinion. Would you use a CBDC if your country launched one? Do you think it's safer than crypto or more dangerous? And if CBDCs become mainstream, will Bitcoin become irrelevant or more important than ever? Comment below. And if you want more deep dives into the future of money, subscribe, because the next decade might completely redefine what money means.